So there were a couple of things that I wanted to talk to you guys about. And first is for the CDC moratorium, how that really is going to affect real estate investors, really from a tax perspective, and just to give you guys some suggestions and strategies to really consider. And then there's a second piece. When we talk about this filing deadline, we've been hearing more and more with the economic changes that there are so many people who are wondering, what do I do if I can't pay my taxes? You know, that extended filing deadline was a deadline. It extended the date to file your returns, but it didn't extend the due date to pay them. But what we're seeing is, for many people, 19 was a banner year, 2020 is not so banner. You know, what's the best thing to do? So kind of looking back on that CDC guidance, you know, unlike the CARES Act moratorium, which that only applied to multifamily rental properties with rental subsidies and federally backed mortgages, that CDC order applies to all types of residential rentals. And there's no requirement that the rental has to be either federally financed or rent subsidized. And, you know, your tenants are still going to owe their rent, you know, but when you look at what's going on, you know, there's no tax deduction or tax benefit for either reducing or forgiving your rent. So really looking at what are some opportunities to do. And, you know, there are pieces of what you may be able to do, working out a payment plan. But remember, if you do reduce or forgive rent, there's no tax deduction for that. But there's some other alternatives. You know, your tenants are still going to owe the rent, you know, because those moratoriums only prevent your tenants from being evicted for non-payment of rent. But there are some other government programs that if you're finding that you've got a tenant that wants to exercise it, you may want to steer to. And then what I can do, Vicki, is send you a link to some of those resources, and you can send them out to the members if they want to check them out. But helping to steer your tenants there could be a win-win, because it would, you know, help them find other ways to be able to subsidize, and it would help you get your rent paid. So just keep in mind that there are some alternatives there. Now, for landlords, many of the landlords, if you're finding your tenants aren't paying, or they're paying but they're slow paying, if you own a rental property with 5 or more units and you've got a federally backed loan, you might be able to obtain that 6-month forbearance on your loan payments. But, you know, there are not a lot of landlords that really are going to have federally backed multifamily loans. And if you're not in that situation, you may still be able to get some relief from your lender for a limited time. And we're seeing more and more lenders are offering to defer landlord mortgage payments for a few months. But keep in mind when you use that, because they're putting those deferred payments at the end of the loan period. So it's not going to be forgiven, but that may be able to give you a little bit of time. Now, if you need cash right now, you might be able to obtain, it's called the Economic Injury Disaster Loan. It's called an EIDL loan from the SBA that might be able to help you, kind of help tide you over until these moratoriums expire. Now, an EIDL, it's a 30-year loan, 3 3/4 interest rate. There's no prepayment penalty, and landlords can borrow usually an amount equal to 6 months of rental payments up to $150,000, and no collateral is required for loans under $25,000. Just keep in mind, you cannot use this money to acquire new property. There are a lot of restrictions, so be sure to understand what you can and cannot do with that money. Now, when I was talking about for unpaid rent, it's not tax deductible. So it's, you know, it's really a debt that's owed to you by your tenant. So you don't get a tax deduction for the unpaid rent, even if your tenants never pay a dime. On the plus side, because it's not taxable as income, it's not reported on your tax return. But I think for all of us, what we want to do is maximize our opportunities to be able to take some of these rental losses. And just remember, if you qualify as a real estate professional, which is always the best way, you're able to take those losses against your current income. Or if your modified AGI is low enough, you'll be able to deduct up to $25,000 of rental losses against your current income. So that's always an option there. Now, if you're not able to take those rental losses, they become what's called suspended passive losses that you can deduct against your rental income in future years or when the property is sold. So really for right now, what I'm working with most of my clients on doing is, depending on where you are, what's our strategy that's going to get you to the best place? So just keep in mind those are some alternatives. Those are some things out there. Are you guys still there?
Yep, we're still here. Thank you,
Okay.
Sarah.
Okay.
We're waiting for Joe to get on. Can I ask you a question?
Sure. Well, and I was going to real quick talk about what do you do if you can't pay your taxes?
Good.
You want me to talk about that real quick? Okay.
No, yep, you take your time.
Well, just keep in mind if you can't pay your taxes, and remember the extended filing deadline's on the 15th, what do you do? Well, the first thing we always want you to do is, even if you can't pay, file your returns. And the reason being, there's two separate sets of penalties. One's a failure to file and one's a failure to pay. So it's real important that even if you can't pay your tax bill, get the return in. Really do. Now, what we see happening is you'll have 1 year where you couldn't pay your tax bill, or you weren't sure how to report something, or you weren't sure what to do. So you just didn't file something, and then all of a sudden that kind of snowballs. One thing to keep in mind between Department of Revenue and between the IRS, they're really starting to automate so much more, and non-filers are a large target. So it's real important, particularly if you've got back taxes, the first thing we need everyone to do is get those back returns, get them filed. And if you need help, let me know. We can definitely help you. And by getting those back returns in, you're going to stop some of the penalties and interest that's kind of growing from there. And there's a second piece of, if you can't pay the bill itself, remember, the longer you go, it's penalties and interest that are going to keep growing. Feel free to reach out, because you do have options. You really do, and there's some other programs that you can work with. But I always do caution people, you probably see them on TV. All of the large national marketing companies are advertising resolution. And the piece to remember is they're approaching it similar to credit card debt, where they try to negotiate the debt down on your behalf. Well, the IRS and the State Department of Revenues don't operate that way. So it's important to, like what I said, get those back returns filed, but you need to really work with someone who understands the ins and outs. Because at that point, what we can try to do is see what we can do on getting interest and penalties either abated or reduced, or many times what happens, you might have had returns that were filed on your behalf, which, remember, is never good, and we can clean some of those up to really put you in a better spot. So use this right now as an opportunity to say, what do we need to do? What do we need to do to clean up and go forward? But don't feel like you've got to do it alone. And I think my contact information is on the website. Feel free to reach out. The last comment, and no one likes to think this way, but if you are in a financial situation where you're thinking, is bankruptcy really my only option? There are times that federal tax debt can be included and discharged in bankruptcy. I'm not an attorney, so I can't provide guidance in that sense. But what we typically do, run some numbers. We provide them to bankruptcy attorneys who can provide some guidance as to whether or not that's your best move. So hopefully I've given some good ideas of things to consider. Vicki, did you still have a question?
And just so everyone knows, Joe, he is getting on. He's just running just a hair behind. But this gives us more time to talk to Sarah. So Sarah, a lot of the people who, not a lot, but, so Sterling, do you see he just got on? So some of the people who are on this call are brand new. Can you take a real quick minute and explain to them why it is so important that they do have a CPA before they really get into the business?
Well, absolutely. I think the piece to remember, like everything, it's a lot more expensive to undo something than it is to set it up correctly. And what I see is there's so much misinformation between real estate investors, between flippers, between wholesalers of the tax treatment, and they're all different. So the best way to think of it is, if you've got a CPA, particularly one like me who understands real estate, instead of you trying to learn it on your own and figure things out and clean up a mess behind, on the back end, I can help walk you through how to get it set up correctly from the get-go. And every time you do that, you're going to find that you pay less tax. And when you do that, think of the tax savings is that's going to go to your next deal. You also make sure that you're compliant, you're doing the right thing, you're setting it up the right way. And you're putting yourself in a position where other investors will want to work with you. Lenders want to work with you. So the money that you save trying to do it on your own is not a savings. You're going to end up, it's going to cost you more in the end.
Okay. So thank you. That's Sarah Holtrup. She is the owner of Profitable Insight CPA. You can find her on the website. Click on the vendors tab, scroll down, and she's just phenomenal. So.